Yeah, I want to get on with some of this stuff with gold and silver again, but I think a lot of the approach that the people in gold and silver crowd took for over the last couple of years about being highly critical of Ben Bernanke was foolish, big time. Actually, if Ben Bernanke was printing a lot of money or whatever the hell it was, and he's causing the price of gold and silver to go up because he's and everybody's saying he's an idiot, he's stupid, he's making you wealthy, dummy. Shut up. Let him keep doing it. As a matter of fact, I would lobby. I wouldn't criticize him. I'd be like, trying to work with him. I'd be saying, let's, you're doing QE, you're buying up troubled assets in exchange. You have to keep some treasury notes. Well, let him take a little small 1 or 2% of that. It has to be in gold and silver, and have them shore up some of their asset portfolio that way too. What do you want to call it? Asset portfolio? Anyway, but you know what I mean. So in other words, you're trying to shore up the banks. You're buying up the troubled assets. You're going on the Federal Reserve balance sheet, and in turn, they're keeping, U.S. Treasuries. But just like gold and silver, just a little bit of that too. That we could lobby them for that, because actually, if they did that, this stuff would go up. It's like you attack the guy, tell him he's an idiot. He's keeping the price down, man. Maybe that's what's going on, right? So, I always said, hey Ben, we'll buy you a beer. What's going on, Ben? Get him, do more QE. You're doing a great job, Ben. That's what I'd be doing. I wouldn't be saying, Ben, you're so screwed up. You're making me filthy rich. Why the hell would I be doing that? It's stupid. That's in effect what the gold and silver crowd does. So I don't know. Stupid. But anyway, Bank of Japan. I'm going to get on something what Soros said. One of my favorite rabbis. He's not a rabbi. He's Jewish, though, right? Actually, Soros reveals you some stuff. He actually just, I don't know. Not like, I don't think he's like a really nice person, but I have to say that he does reveal some tidbits sometimes, and I have to pay attention. He says, like, what the Bank of Japan is doing right now, I forgot what it was. It's like, 1.5 trillion yen QE, whatever the hell it is. It's something ridiculous. That they're doing like a record easing policy. It's a new policy. And Soros says they're going into uncharted territory. So when they do easing, basically, when they're doing easing, they're trying to, they're devaluing the currency, which means that makes their exports more competitive, which actually makes their, production go up in the country because they can export more to other countries. Actually, a lot of countries are doing that against each other, to devaluing their currencies, which theoretically should mean gold and silver going up. But that's not the only force that's going on. But, it's like one force kicks in and another one kicks in. That's so, the pendulum could swing here pretty soon too. You never know. But, he says that they're actually going into very dangerous territory, and they are. So, you might see gold in the, as priced in yen going up quite a bit. And actually, gold has been doing pretty good priced in yen. Priced in dollars, it hasn't been. The dollar's been doing very well. But, just like anything, the Dow's been doing, well, I have to say this. I have to interject what Mark Farber said about the Dow. He thinks the general equities markets and the S&P are going to be down at the end of the year, or, sometime during 2013 because of poor earnings. And if you just follow the logic, it's not like, an opinion per se. It's like he's freaking plain common sense. You can see it's right there in front of your face. The earnings are going to be bad because what's going on, like in Europe, Europe is very slowed down. China is slowing down more because they're having the shadow banking system is actually falling apart, which they had all these bad loans to the construction industry, and it's like domino affecting everything over there. That's why the commodities are going down too, largely because of the shadow banking system having problems in China, which is causing a slowdown. And a slowdown, China is the one that invests in most of the commodities out there. So it's not just silver going down and gold; it's everything, So when speculators get the word that that's happening, then they act emotionally. So They get the word something else happened, and they act emotionally the other way. But Mark Farber did say that, you know, the equities will be down this year, but he's not shorting them because he says there's so much money printing. You don't know when they're going to go down, or even if they stay level and the bubble goes up someplace else. That's what goes on. Where the bubbles are going to go is almost unpredictable. But one area I think was like an explosive bubble during 2010 and 2011. Actually, 2011 was in the rare earth metals. Some of the stocks, like, they were sitting flat, they were sitting flat, they were sitting flat. Then they went up like 7 to 10 times in September of 2011, in the rare earth metals. But right now, one of the biggest picks by investors to short a stock is Molycorp in California, which is rare earth metals. So rare earth metals, it's kind of another indication that commodities may not do good in the short-term future, are probably going to crash right now. Who the hell knows? That's something I'm looking at, because you got to watch, gold is actually a hell of a lot less volatile than any other damn thing out there. So, and silver is not, there's other commodities out there even more volatile than silver. But, they're not too bad for the small investor, to tell you the truth, because they're not going to move around as bad as some things can actually move around. I've seen the isotopes go from somebody, it was like they're $2,500 an ounce to $3 an ounce. I mean, that's some crazy moves. So like they can, metals can actually jump around really bad, some of the more exotic stuff. But, I expect that, when the markets turn down in the United States, it's like, to tell you the truth, I think the worst bubble out there going right now is going to be Bitcoins. And the higher it goes, that's going to blow up even more. But you're probably going to see the general equity markets in the United States go down, because they have been high. They have been high. It's like you're watching the curve going up, 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 up. And you just think it's going to continue. But like he stated, it's not so much looking at the charts or the curve. Where's the earnings going to come from? There's a slowdown in the world everywhere, and that's why everybody's practicing quantitative easing and more money printing and devaluing the currencies, because they want more exports. They want their currencies lower so their exports are more competitive. Therefore, their factories can produce more. That's what's going on in Japan. That's actually what's going on worldwide. And actually, that's considered currency wars. Then there's trade wars, and then they say there's real wars after that. So, but also Mark Farber talks about, I'm not really, I think he's more correct than anybody. I'm not like kissing his ass. I'm not growing a ponytail or nothing like that. Like he's got for nothing. But I have to see. I follow his logic all the way. I mean, I just see it's clear as crystal clear. What he's telling me, and when he says, it's not like it's a theory. He's basing it upon common sense facts all the way. I think he's going to be dead on with most of the stuff he says. He says with gold, it's not going to even be. It's going to be tough to hide even in gold. And, part of their reason is, I think if gold goes way up, they're going to tax the hell out of it, just like they taxed oil with a heavy excise tax in 1979. If gold goes way up and the government's broke, they're going to tax the hell out of it. Even there's some parts, I think, even in Texas, where if you're selling precious metals, they want you to be fingerprinted. So, now there might be some other ways around that deal. I don't know. I mean, I know with real estate, they used to have the 1031 like kind exchange. Like if you had a capital gain on some real property, you might have cash for it. They'll call that boot. That's the old English term, boot. You got some boot cash. But if you had a you could do a 1031 like kind exchange. But I don't know, like if there's like a because there could be a very heavy tax on gold and silver if it goes way up. That's what I think is reality, and that's why he probably says it's difficult to hide. I don't think it's not going to go up. I just think that when it does go up, there's going to be other ways that they're going to try to take a slice of it out of it. So, And I don't know, Jim Rogers talked about like what's going to happen in Cyprus. They're all saying it. Actually, Peter Schiff. Peter Schiff's not so bad. I mean, I think his long-term, like somebody stated, his long-term goals, long-term predictions are going to be good. It's just that Mark Farber's told me a lot of different things as far as short-term. And, in other words, Peter Schiff might be telling you to keep buy, and there might be a temporary downturn and you have to hold off a lot longer. Actually, if you're paying attention to Mark Farber, and really careful, not just cherry picking his words, you would have gotten out of commodities in 2011, like before QE2 ended. And actually, he wasn't the only one saying it. Actually, that was some people in the major media were talking about that too. I mean, don't tell me all these guys that are in established this and that are all bullshit. They're not. They're not all bullshit. They'll cut your throat in 2 seconds. I guess if you get the people on the top with a lot of money, man, they don't give a shit about nothing. I mean, that's why they play that philanthropy game, because they'd be killed. They play like, yeah, I got a lot of money, but I give so much back to the community. That's why they play that game. They all do that shit. But, as far as them not knowing what the hell is going on, a lot of times they give you tidbits. Pay attention to Soros, too. He says this stuff with Japan is actually in dangerous territory. And if there's something that goes wrong there, it's going to be another place where the metals can possibly go up. Like I said, what's causing the metals to contract right now is the shadow banking system of China having problems. And, when China has problems, basically the commodity markets have problems, because they're 60% of the overall commodities consumed in the world. 60% of them go to China. So if they got to slow down, guess what happens? But silver and gold are a little bit different animals than just plain old commodities. So and it's also in China's interest to keep the price of the commodities low, because there are a lot of people in China that keep accumulating more and more gold and silver. Actually gold, but silver too. So, it's like the physical markets are, the theory when they say the physical markets could basically be a real physical shortage, that's not too much of a theory, because I know coin buying is actually one sector, small slice of what goes on in the silver market and the gold market and stuff, but the coin buying is so heavy right now that I also think that even in the industry, there's probably people accumulating silver in different places. Like, in other words, if you were a manufacturer and had silver, you'd probably keep more silver on your inventory too. Good way to hide money too. Because what's in inventory could be valued at cost, and if you just keep it in inventory, it's just an asset. It's not even considered in the bank, right? If it's part of inventory production. So, I think that, with all the mines going, the mines are actually, a lot of the mines are doing so shitty right now, money-wise. I looked at one of them, and one of the miners, and it was like, I was surprised the stock was going up, because they actually showed reported earnings of like major losses in 2012. And, it looked like, the estimated earnings in the first quarter of 2013 were piss poor too. So I'm like, I don't know why then it started going down again. And I was like, yeah, that makes more sense. But if they start putting these miners down, even, they don't necessarily have to shut down the mine all the way. But once they start slowing down enough where they're not actually looking for more silver and all this type of stuff, they're trying to cut corners, in other words, just produce what they have, not expand operations and stuff. When the physical demand is still there, and if the physical demand even picks up more, the supply's not going to be there. I mean, if the price went up to $200, there'd be plenty of silver, but it would take a little while for in other words, it ain't like, there's a shortage of hairstylists or some bullshit. You can just snap your fingers and get a whole pile of people and teach them how to be a hairstylist, right? But with a mining company or oil companies or anything like that, it takes a lot to get that product to the market. There's a lot of steps. And once you get it going, it goes like a nice smooth production. But if you get it to the point where there isn't enough production, you just can't turn the spigot back on fast enough. So that's where the price can really, really move up high. And so I have to say is, the writing's on the wall for the system, man. The system's going to fall apart, basically. Not completely. Not completely. It's not like gold and silver going to be your forever haven. But it's going to be enough. It's going to be a haven for at least a few years. Easy. And, when the pendulum swings the other way, the voices that come out at the other side are going to say they're going to be too excessively bullish, and they're going to predict astronomical prices, as they always do. But, one thing I wish they would stop doing is telling Bernanke he's an idiot, he's evil, he's no good. I don't think the guy, actually, if you think about it, if you're sitting in the hot seat, what the hell could you do? Nothing. I would lobby Bernanke, I would say, Bernanke, we got to do something about these gold and silver prices. And, when you're shoring up the banks and stuff by buying their troubled assets and you're giving them treasury notes, let them, make it a requirement that they put like 1 or 2% into gold and silver or some type of precious metals mix, to, basically diversify the risk. If you lobbied him to do that instead of telling him he's an idiot every 2 seconds, we'd probably be in a much better position today. But, the gold and silver crowd pretty much shoots themselves in the foot every time. Sometimes I wonder if there's actually some bearing on that, too, because every time, when this stuff was going up a lot, they're all criticizing the crap out of Bernanke. If it goes down, they blame him. If it goes up, they blame him. Let's just work with the guy, We need some gold and silver to shore up some of the banking assets, out there. Put that in your portfolio, so have them buy up a little bit. That'll help us out.